Ladies and gentlemen, welcome to another Stuck in the Middle podcast episode. I am your host, Uncle AK, back at it again for another great episode. Before I introduce my guest today, hit that subscribe button for weekly notifications. If you've not subscribed, follow us on all social and streaming platforms at SITM Podcast is uniform like that. Um, yeah, let's get into it. Today, I'm speaking to a financial advisor. He goes by Brandon White. Hopefully, you learn a thing or two because I myself am about to learn a whole ton of financial information today. One of my favorite topics actually, talking about finances. But let me give you a little background of Brandon White. He's a skilled financial analyst at Northern West Mutual, helping professionals from various industries shape their financial future through strategic planning. He holds degrees from Morehouse College, well, okay, and the London School of Economics. With over 5 years of experience in finances, Brandon specializes in insurance, investments, and auditing. Passionate about enabling his clients to achieve their financial goals, he continually seeks to expand his knowledge in this dynamic field. Join us on this podcast and hear Brandon share his insights on making intelligent, integrated financial choices. Welcome to the platform, Brandon.
Hey, I appreciate it. Thank you so much for the wonderful introduction, man. It's a pleasure to be here. And yeah, finances are a really big passion of mine. So I'm ready to just dive into whatever question, comment, or concern pops up about it. I'm ready to go. So yeah.
For sure, for sure. Hey, you reached out to me saying, "Hey, man, you seen what we're doing on Stuck in the Middle, and you would love to share your passion." I greatly appreciate that. I really greatly appreciate that. I've been I've been trying to revamp Stuck in the Middle, get folks on to come share their experiences on how to break the mold, break into different fields, especially finances, right? So really, really greatly appreciate it. But let's begin like this, right?
Yeah,
Um, you went to Morehouse. How did that come
I
about?
did. I did. Yeah. So Morehouse, I had a family friend recommend that I go to Morehouse when I was really young. I grew up in Silver Spring, Maryland, and went to Stonegate Elementary, moved to PG County when I was in about middle school. So I went to like Bond Mill, then went to MLK in Beltsville. And I'm a Howard baby. Like my mom went to Howard, aunt went to Howard, brother went to Howard, like everybody in my family went to Howard. So I was like, okay, cool. Like I'm gonna go to Howard. Like I got my lanyard, like in my other room from Howard. Like everything to me is Howard. And I had a conversation with a family friend growing up, and he was like, "Hey, I think you should consider Morehouse." And I was like, okay, like, I mean, like why? Just like, oh, well, it's a good school, like you have fun. I'm like, all right, but like I'm going to Howard, so it doesn't really matter. He took me on a trip there, and what I saw in person, I was like blown away just from the culture, but not only the culture, but just like that Atlanta feel. Like I never really been to Atlanta by that point. I think I was like in high school when I first visited. And we had this thing, I'm sure people at Morehouse know, it's called like Market Friday, or there's like a thing where like all the frats, all the sororities, they get together, they stroll, they put on, like you get to get like food, get like other stuff. So I don't know, it was just interesting to see just like what else is going on there. I was like, yeah, I gotta go. And even like when financial help came just from like a scholarship perspective, Morehouse gave a very, very sizable scholarship in the form of like 100%. And I was like, oh yeah, I'm going. Like I go where the money goes. I know I'm in finance, but like I go where the money goes. Like that's my thing. So it's like once that happened, I was like, yeah, I have to go there. And yeah, it was a great 4 years. Also did study abroad at London School of Economics with that as well, just to tally on that, just get that worldview perspective. And it was really awesome, man. So yeah, Morehouse was it was part of the cards that I had to play. So
I just wanted to ask you too, the London School of Economics, like if that is that was that in London abroad, or is this school here in the States called that? But you already touched on
oh man,
it.
if it was a school here in the States called that, that'd have been so disappointing. No, I was in London. They called me Harry Potter when I was over there. I was called Harry Potter. I was doing magic tricks. I was seeing the streets of London, but no, I was staying in King's Cross. I've never seen Harry Potter, but there's a scene with the trains. Like that's where I stayed. It was called like King's Cross or whatever. It was like Urban-esque. And yeah, London was a good time. I was out there for 6 months, learned a lot, had a lot of fun. but it was definitely not in the States. Like they make that
Would you
clear.
recommend that experience for most folks who really want to,
Yeah.
have that?
I'd recommend doing a study abroad for sure for everybody. Just because we tend to have our opinions and our values and beliefs shaped by our ecosystem and where we're around, our environment and where we're around. And it's very important that you have those ideals, beliefs challenged in some way, whether it's challenged by other people, whether it's challenged by other experiences. I think it's really important just to have that, have another perspective, because seeing things in one perspective can tend you just go linear. You won't really grow exponentially when you don't get multiple perspectives. So 100% I'd recommend it to anybody.
True, true, true. Let's touch a little bit about, your background in finance. How did you get it?
Yes.
How did you get into that, or why? And how have you made that work for not just you, but your client?
Oh yeah. So I have a lot of interest growing up, which I think helps a lot in my career. Just like talking with people, I had a lot of interest growing up, a lot of interest, heavy interest in music. I played trumpet for 14 years, heavy interest in sports. Like I had my own sports podcast. I used to play basketball, play football, ran track, did all of that. I think I woke up one day and I just realized I'm not gonna make enough money doing this. Like I'm just not good enough. Like I just knew, like like there's delusion from a lot of people growing up where it's like, oh yeah, I'll make it to the league, make millions of dollars. Luckily, I had I don't know whether it was what you call divine intervention, where it's like, hey, you're not gonna make money doing this. Like I was like, yeah, probably not. But I can be the guy that writes those guys checks. Like I think that might be pretty cool. So I was like, let's do that instead. And luckily, I was pretty good in school where I was like, all right, I want to just study however I can write those checks to those guys. And it was like, well, they're all business guys. I was like, all right, well, let's do business. And I started off with business, particularly in accounting. That was my first interest, so to speak, at least in the business field. Did an internship in Georgia, figured out, yeah, accounting, absolutely hate it. Not for me. Can't do it ever again. Like throw that in the garbage. Like that, it just wasn't for me. So I switched to finance my sophomore year at Morehouse. And the world of finance is very interesting because it's very different. There's all different layers. There's personal finance, there's banking, there's commercial lending, like things like that. So it's just like this allowed more flexibility, this allowed more control over what I wanted to do, and just tap into my interests, tap into my personality way, way more than accounting did.
Yeah, yeah. Oh man. Um, Investments, insurance,
Yes.
right?
Yes. Yes.
Where did I write that? Oh, investments, insurance, auditing. Let's touch a little bit about insurance alone. You know what I mean? There is so
Let's
much under insurance.
let's talk.
One thing that really pisses me off in this world right now.
Yes,
And why do we pay so much insurance to things?
of
And
course.
like car insurance, for example, you could pay car insurance for 20 years and never get an accident and you don't get a check back. Really pisses me off. But anyways, let's talk about that really. How can people what really is the importance of insurance, right? And
Yeah,
can people leverage insurance? How can businesses leverage auditing? Even individuals like myself who run podcasts, right? How can we leverage all these things to make it work for us?
absolutely. So before I even get into that, just to be very clear, like I understand insurance is a very bad rep. Like I get it. So let's get the elephant in the room. Like insurance definitely a weird topic. But I'll also say that specifically in terms of insurance, when it comes to financial planning, there are tons of hedge funds, tons of corporate banks and corporations that actually have insurance on their books. And that begs the question, well, if insurance is so bad and it's such a waste of money, well, then why do they have it on their books? And it's like, well, it's to protect what they have. It's like, well, it's a little deeper than that. There's a little bit more under the hood of using insurance and an integrated plan. So typically, when people think of insurance, at least when it comes to financial planning, they typically think of just term life insurance, right? Just straight term life insurance where we're protecting from all the things that can go wrong so that you can invest in all the things that can go right, right? You're paying into this policy that could expire at some point and you don't know if you're ever going to reap the benefits. So it's like, well, why would I do it? I could just invest the money in the market. I could do something different. Well, a couple things. I always ask clients whenever I'm in front of them, it's like, well, you have this insurance on your books, life insurance, you have it through work or you have it outside of it. It's like, at what point are you absolutely, positively, 100% sure that you will not want or need any more life insurance? And the answer usually is, well, I don't know. I mean, I probably want some on the list, right? It's like, all right, cool. Well, how in the world are you going to solve that by renting the coverage?
Mm.
You're renting the coverage. So it's like, how in the world are you going to solve that problem of renting the coverage? And it's like, you're just borrowing the coverage, right? I actually don't really enjoy term insurance for that reason. I actually think it's not designed well for the long stretch of time, for the long term. For the short horizon, when you're like trying to save up money and you just need to create some capital, create some cash in the meantime, if something were to happen, then I think it makes a ton of sense. However, I think permanent insurance is a much, much better option from a long-term perspective because the money is actually being saved. It's actually going somewhere in a savings vehicle. And I'll touch more on that in a second. But yeah, I'd say the biggest thing is making sure you're integrating the plan because when you're talking about your market correlated assets like your 401ks, your IRAs, your brokerage accounts, while it's great, while those things go up over time, those things can go down and well and lose value.
Right.
And the problem arises when you have to liquidate at the wrong time. That's when problems start to happen, like '08 starts to happen, or COVID, and the market starts to draw back. You want to have a fail safe in terms of something were to happen. So,
Let me step back a little bit, right?
yes.
Because a lot of folks will go, why do I need a financial advisor?
hmm
Right. So can you please answer us that question? Why does everybody need one? Or is it just for
Yeah.
those folks? You know what I mean? Because some people will say, oh, I think you need some amount of money to be able to have one. Is that true? If not, why does everybody
Mhm.
need one?
You know, that's a very interesting thing you mentioned that because it's funny. Nobody ever approached my mom, and she makes six figures. Nobody ever approached my mom ever in her life about this type of stuff, about financial planning. She's 60, by the way. Like, I was the first person that approached her about financial advising, and she's 60 years old. And she makes six figures. It's like, not like she's not making money. So, like, yeah, not everybody, and I'll say this, not everybody needs a financial advisor. However, they can be very helpful for several reasons. Number one, an advisor is going to give you accountability on a lot of these things. So it's like you might say like, "Oh yeah, I save money." It's like, "All right, well, let's see your savings." And it's like, "Well, I don't really save money." It's like, "Yeah, like you don't save money. Like you don't do 401k, like maybe you do that, but it's like you don't have a plan in place, right? That's the big thing. You could save all these different directions. You might have an investment account here, might have a Schwab account here, you might have a Robinhood here, might do some crypto, might do the 401k, but it's like, where is it all going and what is it all for, right? What does it actually mean? And that's the big thing. It's like you're just throwing money in these different buckets and pots. You don't even know what it's used for or what the best job description for those dollars are. And I'll be honest with you, a lot of my clients, they can execute these things on their own, right? I tell a lot of my clients in our first meeting, it's like, yeah, you probably be fine without me. Like you'll probably be just fine without me, with ever actually talking with me. However, there's a couple of things, right? Number one is just efficiency from a tax perspective, efficiency from an investment perspective, a planning perspective. But then also the biggest thing, man, which is the most valuable thing in the world is time, right? It's a finite resource. And I have actually sat there with my phone and calculated, like, because a lot of my clients are in the law field, so they understand billable hours. And it's like, hey, we could calculate how much it would cost you to actually think about your financial picture 1 hour a day, right? Let's say your billable hour is $40 an hour, $100 an hour, whatever it may be. I can actually calculate that over a year and see how much money you're losing thinking about your financial picture. And then when I actually put the number, when it's thousands of dollars in their face, it's saying, yeah, you're wasting this thinking about your financial picture when you can just have an advisor do it. It's like, huh, you know?
Yeah.
So it's just one of those things where it's like, it's just perspective. Again, not necessarily do people need a financial advisor. I don't think everybody needs a financial advisor, but I think everybody should have the accessibility to have one for sure. Doesn't matter if you're making $5 an hour or if you're making $50 million an hour. It doesn't really matter. You should be able to have access to one. I'm pretty passionate about that as well.
Yeah. You don't mind me asking, how much does it cost a month or a week to actually have a financial advisor?
Yeah, yes, that's a great question. So it's going to vary across the industry. The reason why I like working at Northwestern is because there's actually not a specific cost associated with having an advisor, right? A lot of our clients' conversations completely free. Building out a plan is completely free as well. The only ways that we could compensate it is if like, hey, if they decided before on an investment solution, we're an open platform. So whatever investment solution that you want to get, you're probably already paying. If you're open up a brokerage account with Vanguard, if you open it up an IRA with whatever account, there's fees on that account associated with it. They call them soft dollar fees, which you're already paying. You wouldn't pay anything extra on top of that. With somebody at Northwestern, you might have to pay an asset management fee of about 1% under that account, but that's about it. There's no like upcharge or anything like that. And then the insurance products as well. The insurance company pays us directly, so there's no upcharge again as well. Like you're already paying for these things. It's just transferring the money from one entity to another entity. That's pretty much it. Um, so there is no actual cost. Like it's not like a $5,000, $10,000 hour. And again, that's not same across the board. Some advisors will actually charge you $10,000 an hour for your time. I don't believe that because I believe it's a barrier to entry to people that look like us. So I don't really believe that. I don't think that makes a ton of sense when you're trying to build up. Say, hey, I'm trying to instill economic stability, financial stability, generational wealth. You're charging this fat fee for people that can't afford it. That doesn't make sense. And you're already making money off the investments that you manage. That also doesn't make sense. So, as you can tell, I talk about this a lot with my colleagues. I
Yeah.
don't think it makes a ton of sense to be charging hella fees on these accounts. I just don't. So,
Yeah, yeah. You mentioned something there about generational wealth. That's a
mhm.
that's those are words that people of our kind mention a lot, right? You see it on the race. They so much into generational wealth. Their kids come out of college already set. Um, what's an advice or advices that you might give Black folks, especially when it comes to
Mhm.
generational wealth? Because I don't know if we get it wrong or
Mhm.
even get the idea of what it is, or even begin to get an idea of what it is. So maybe my question is, can you please help me explain really what generational wealth is and some
Mhm.
mistakes that you've seen our kind make when they're thinking about generational wealth or even talking about it?
Oh, yeah, I could speak to many examples. So I would define generational wealth as being able to pass down wealth in the most efficient manner, right? Being able to do that in a very efficient manner from a tax perspective, that's probably going to be just the biggest eroder on these types of plans from a tax perspective specifically, but then also making sure that everything is ducks in a row, like wills, trusts, things like that. But specifically speaking, generational wealth is being able to pass down wealth in an efficient manner. Very, very specifically tax, right? So I always tell clients that there's 4 phases of taxation whenever you pass down an account, right? There's a contribution phase, there's the growth phase, there's the distribution phase, and the transfer phase. So you can have these accounts, we have to understand how they're taxed from a different perspective, right? Like people's 401ks. They're like, I'm just going to give my 401k to my kids, built up this nice 401k asset. I'm going to give that over to my kids. Well, the 401k is a great way to turn a dollar into a quarter just because of all the taxes that gets hit on that 401k when you pass the money down.
$7 to a quarter.
Yeah, a dollar to a
Okay.
quarter.
I think
When
it's
you're talking about federal, city,
yeah.
state, like Uncle Sam is a fat man when it comes to those 401ks. He's a big guy. So it's the fastest way to turn a dollar into a quarter, at least on the traditional 401ks and people's houses, right?
Mhm.
It's a it's just a big thing. I even talked to it about like really gentrifying areas, like how areas get gentrified is because like people that look like us, they'll own the homes, they'll die off and they have their kids like either the kids can't afford the mortgage, they can't afford the estate taxes, they can't afford probate taxes, and they have to end up selling the house sometimes at a really significant discount. And that's what strips us of our economic feasibility is owning homes and have being able to pass down homes efficiently to the next generation. So when you're talking about generational wealth, it's very important. It's like, well, what is your plan after you leave, right? Is it to leave some money? Is it to leave enough money? Is it to leave enough money that they can take care of, their education, they can take care of their ducks in a row, their future kids, whatever it may be. Like, what does that actually mean for people? Because sometimes just like, oh, I'm just going to pass down some money. It's like, well, are you understand that Uncle Sam might take half those dollars, right? You built up this estate to be very, very efficient. You built up this large estate, and now Uncle Sam is going to take about half of it, sometimes more. And we have to figure out how to subside that or mitigate that when you pass that down.
You know, man. I'm still thinking about that dollar to a
The dollar to the
quarter.
quarter.
No,
Oh
no,
yeah.
that's a good one. That's a very good one. But let's speak a little bit about you, right? And how you help your clients
Mhm.
gain financial stability, financial freedom. What are some of the
Yeah.
services that you provide?
Yeah, absolutely. So we take clients through an experience basically known as just like our financial planning process, right? And we look at it from a few different lenses, right? Number one, we're going to focus on risk management. As I was talking about earlier, I have to protect you from all the things that can go wrong so that you can invest in all the things that can go right. Under risk management, we have insurance planning. Do you have the right types of insurance, the right amounts of insurance? What is that insurance for? When did you get that insurance? Um, Building up an emergency fund, which is so slept on. It's like, hey, before you start investing, you have to have 3 to 6 months of expenses saved up, which a lot of people don't have. And the problem becomes when you have like 10K in a brokerage or 5K in a brokerage, whatever number you want to pick, and you want to liquidate those assets. Well, it's like that's a problem because that's money on the roller coaster. You want to have money that's safe, you want to have money that you can access. So it's just under risk management, it'll be insurance planning, it'll be emergency fund planning. It will also include debt mitigation. So a lot of my clients that might have student loans that they're dealing with that they want to get off the books. They might have credit card debt that they want to get off the books as well. So building out a plan to get off that credit card debt and really getting a solid foundation in place. That's going to be step one. Next step on top of that would be wealth accumulation. How do you accumulate wealth, right? Where do you save those dollars, right? Is that through a savings account? Is that through brokerage? Is that through the retirement accounts at work? 401ks, TSPs, IRAs, whatever. Figuring out that game plan for accumulating that wealth and building up those saving strategies. The next step on top of that is going to be wealth distribution strategies, which is honestly one of the most important things because you built up this estate, you built up this retirement fund, you built up this wealth. Now, how do you distribute it? That is the trickiest and most important part is distributing that wealth and how and where to pull from, and what time to pull from in case something were to happen. So wealth distribution is going to be big as well. But then under all of that is going to be very tax strategic. Just because under Uncle Sam, we're all cousins. So we got to stick together. I can't be tipping the IRS. So we have to make sure how do we do that, right? And then it's just going to be accountability as well on top of that too. There's like it doesn't really make any sense if we just build a plan and we don't get anything done or you don't do anything. It's just like it's just a dream. It's not a goal, it's just a dream. So
So accountability, that's on both sides, right?
you said both sides.
Yeah, both sides, that the client and yourself as well. Because I was just going to
Yeah.
ask that, have you dealt with any difficult clients and can you share a success story? You know,
Yeah, yeah. Oh, yeah. All the time. I mean, it's a difficult business. Everybody's difficult, man. It's just like we're talking about finances, we're
right?
talking about people's money. You think people are going to just roll over and be like, all right, cool. Like, no, it's very like stressful and it's not a very fun time at all a lot of the times. And here's the thing, to be honest with you, yes, it's a very emotional business because people can upset you. But if you take yourself out of the equation, it's not that big of a deal anymore because what we're supposed to be is other focus. That's really the goal of an advisor is to be other focus. So if there's a situation where you express to a client, hey, you need to do X, Y, and Z, and they're like, screw you, I'm not doing that. You can't really get mad at yourself because it's not about you. You're supposed to be able to empower that person or that client to do something or take some action to take actual steps. If they don't do it, well, then it's like I did my job. Like what, I did my job. I did what I was supposed to do, which I educated them on the things that they're supposed to be educated on. Um, oh yeah, difficult clients. I mean, yeah, I have clients that will cancel stuff, get stuff out, like, I mean, all whole nine. But once other focus, you don't really, it's not a big of a deal anymore, just because it's like it's not about me. It's not about my situation, it's about their situation. If that situation they wanted to be in, then great, like that's that. But I did give them the necessary steps to be able to take the future that they want to take. I just look at their notes whenever I go through meetings. I'm like, you said you want to do X, Y, and Z. You said you wanted to save money. You said you want to be good for retirement. Like, if you don't want to do that, that's fine. Like, but I'm just literally relaying what you told me. So yeah.
Just along those lines, what are some like how do you measure success right in your field? Both
Hmm.
your perspective and the client's perspective.
Yeah, that's a great question. So on paper, there's really going to be two main things that a financial advisor, at least an integrated financial advisor, is going to track. Number one is going to be their insurance production, and number two is going to be their AUM, or assets under management, their investment production. Those will be the two biggest things that we'll track as to see, are we successful, right? Are we having a successful career or year? How many people we onboard? How much money people are paying us? And while I understand it's a business at the end of the day, um, success to me is making sure that I'm impacting lives and the lives of my community. And that just like what that means is that, hey, I might not officially have that person as a client for like 5 years, but if I was helping them for those 5 years, like that to me is a success. If I help them save some money, that would be to me a big success. If I help them get a clear picture on their economic outlook, that to me is success. If they can tell their friends, hey, I had a great experience with this person, that to me is a success. So on the spectrum or on average, like the barometer or gauge of success is usually tracked by varying, numbers. How many people did you see? How many people did you onboard? How much money did you make? And while that's great to track as a business owner, just as a person, it's like, hey, I'd rather just focus on helping people and impacting lives as much as I can and developing myself as much as I can in the process. So, um, two different versions of success depending on how you look at it, because one is infinite, right? There's not enough money in the world for you to be happy. You're just going to want more money. But the other one is if you can make an impact in people's lives, like that is very tangible and you can do that one day at a time. That's very easy to do.
It's a financial advisor, right?
Mhm.
When you have a family, or family wise, now we have family, but family wise, a lot of people might say, you know what, you're gonna be, this great dad, teach your kids financial literacy and all that. But sometimes
Mhm.
too, kids grow up and they have their own minds of it. They have the minds of their own. They want to do something else, or they want to follow whatever thing that comes to their mind at that given point in time, right? I'm just looking here for how do you set family up, for success
Mm.
and ground up, like, hey, this is what we're gonna do, this is how we're gonna do it, and encourage everybody to follow suit.
Yeah. And you mean from like the client's perspective, or you mean like my own family?
Both.
Okay. So from the client's perspective, it really is going to start at the head of whoever makes the financial decisions in the head of the household. Because most of the time, like as people that follow the head of the household, whoever runs the finances, we're just going to do whatever they did, right? I mean, yeah, we'll have our own experiences and we'll have our own beliefs, but 9 times out of 10, you're going to call your folks and be like, hey, like, what would you do if you were in my situation? Be like, all right, boom, I'm going to do that because that's just your guidance. So it's number one, it's going to be focusing on the head of the household. That could be the husband, that could be the wife, doesn't really matter. Like it could just be whoever runs the finances in the house, right? It could be the child. It honestly could sometimes. It could be the child. And it's empowering them to say, hey, like this is what it looks like from your perspective. Like this is what your financial picture looks like from a risk management standpoint, from wealth accumulation standpoint, and just how you want to distribute it all. Once you're able to affect that person's mindset and see, hey, this is what I should do, that's going to flow into everybody else because they're just going to follow suit. Or it's like, hey, I heard about this Roth account. Like, tell me more about that. Oh, yeah, like this is what my financial advisor told me to do. So that's what I did. And it's like, I didn't know I had a Roth. Let me go do that. And it just spreads like wildfire. And it really just starts there. And honestly, I would answer the same thing with my own family. It's just like my mom calls me all the time. It's like, what do you do? I'm like, this is what I do. All right, I'm doing that. Like, that's just, it is what it is. You're doing Raw? Yeah, let's do Raw. All right, cool. Let's do Raw. So,
No, that's
yeah,
dope. That's dope. You've probably touched on this, but if you can still elaborate on it, if you have, like
yeah.
some of the most or one or two challenging aspects of your career as a financial advisor.
Oh, yeah. Dude, I'll be honest with you. The most challenging thing about this career is everything in between your own two ears. You'll beat yourself up more than the world will beat you up about this type of stuff. Just because, number one, it's already a very challenging career from you have to see a lot of people. You're getting told no way more than you're getting told yes. And it's managing that belief or that belief system that, you can actually succeed in this career. because there'll be so many external factors, whether it's monetary, whether it's people telling you shouldn't do it, whether it's people telling you no, clients telling you no, clients leaving, where it's like, can I actually do this? Um, and mindset is so uber important in this career. It's so important. That's probably the most important thing, to be honest with you, just because there's a plethora of challenges that an advisor will face, especially early on in their career, um, where it's like, all right, if you have the right mindset and you tell yourself that you can do these things and you believe that you can do these things, that'll shape your day in a way different fashion, right? You'll start to look at meetings not as good or bad, but rather, what did I learn from these meetings, right? You'll learn that, okay, all right, I see all these opportunities. How do I maximize opportunities? How do I stay in the game? How do I keep the game going? How do I keep the wheels churning, so to speak, and not get complacent? And once you're able to effectively master everything in between your two ears, everything else becomes a lot easier on the outputs. Once you can manage your own insecurities, you can manage your own beliefs, your own types of things. Like, you have to believe in these products way, way more than your client does. You have to, because it's not going to come across as genuine. You're telling somebody to buy something and you don't even have it. It's like, what are we doing? Like, so it's just buying in not only to yourself, but also to what you sell. Advice, security, different products in the spectrum. It's like, whatever is suitable for you is suitable for your clients. You have to believe that. It's like, if it's suitable for me, heck yeah, I want other people to do it. But that takes a lot of repetition, meetings, getting kicked down, whatever. It's like, that takes a lot of that too, but you'll be able to build that muscle. Like, all right, like, I have so much conviction towards what I do. Like, it doesn't matter anymore. Like, I just believe in what I do so much.
Yeah. Speaking of belief, at
Mhm.
Northwestern Mutual, you could have been
Mhm.
any place else, right? Why Northwestern Mutual?
Oh, it's very simple. So Northwestern Mutual, number one, they pay the highest dividends in the marketplace for their cash value insurance. Like, no questions asked. So when you're talking about life insurance, specifically permanent life insurance, it's very similar to owning a stock in a company. Like, if you own a Nike or own Apple, you would go with the company that pays the highest dividends. You just would. Why wouldn't you? They pay the highest dividends. So from a life insurance perspective, there's companies that don't pay dividends. There's companies that pay their stockholders first, policy owners second. They're a publicly traded company. And then you have what's called a mutual company. A mutual company is going to look out for the policy owners first, way before they're going to look out for anybody else, because they don't have anybody else that owns a company. The policy owners, literally, they own all the profits. So they reap most of the profits. That's number one, is on like the math side, right? It's just more dividends for you. Um, from a planning perspective, I have not seen anybody in the marketplace that matches what we do from a planning perspective. Number one, we integrate investments and insurance. We're the largest insurance company in the United States, as well as the fourth largest broker dealer on the investment side. Very, very, very rare combo to have. Two top five in both investments and insurance. Very rare. I actually don't even know if it's replicated anywhere else. Um, and just from what I've noticed, from their attention to detail, their how Northwestern Mutual agents go to market in terms of how they connect with clients, right? Like, I know more about my clients than like probably like their parents do, at least from some perspective, right? Or just like, let's just say they're best friends, like their best friend, maybe not their parents, but their best friends. I know a lot more about what drives them, what fears they have, what goals they have, what they want to accomplish. And that's the thing, like, you're building these relationships very early on. Where if I was just a money manager, for example, um, I would more so focus on, hey, you got a rate of return. You got an 8%, 10% rate of return on your IRA. I would just be pitching you products from my company. It's like, this is what you can buy. Boom, sayonara, have a nice day. It's a little more transactional, um, versus saying, hey, not only do I want to work with you from the ground up, like I want to work with you when you're starting out your career, building up everything you want to build up, but lasting that with your retirement plan, lasting that with your generational plan, your transitional phase, like what you want to transfer on to the next generation, working with your kids as well. I have genuinely not seen another company that's been able to match that from their products to their how they go to market with their planning to the connection that they have with their clients, and just the mobility that a lot of the agents have. Like they're allowed to do all these things just because we're on entities. We're not really bound by what Northwestern tells us to do because we're basically sole proprietors in that respect. So we have a pretty much free range to do whatever we want, like having this conversation.
Right, right, right.
you know? So
How do you stay informed? The market changes every day. Matter of fact, every minute, every hour, it changes. How do you stay informed?
it's so funny. I stay informed, but not as informed as you probably think I stay informed as an advisor. Like I read up on some things. I'm subscribed to some different podcasts. I'll hear about different things. I'll hear something about Dave Ramsey, hear something about how the market's doing. But I tell all my clients, and like the reason we're doing this planning is because we actually don't care what happens in the market. And that sounds counterintuitive, but we've put in buckets that you can put your money into where it's like our clients don't really care what's happening in the market because we know whatever's going to happen, they're going to be fine, right? It's a long-term strategy. When you're looking at it from a day-to-day or week-to-week, obviously the market's going to be very volatile and you just don't know what to do. That's the whole reason we have a conversation is because it's like, hey, people always ask me at cocktail parties, like, what do you think the market's going to do? What do you think about interest rates? What do you think about inflation? What do you think about real estate going up? I tell them the same thing. I don't know and I don't care. And neither do my clients. And that makes them feel good, is because, yes, while I understand that the market's volatile, like I don't have a crystal ball. I don't know what the market's going to do tomorrow. I know what's probably going to do long term just based on time tested strategies. And having money in the market is always going to be beneficial from a long term perspective. But in that meantime, let's put some fail safes in place in case what if the market goes down? What if taxes go up? What if those things happen? Let's have different buckets that we can pull from. And when you have that in your face in your plan, you don't really care as much what happens in the market because you have different things to pull from. You have different buckets. It makes you more efficient from an investing perspective. It's why a lot of hedge funds have insurance on their books. Why a lot of banks have insurance on their books because it allows them to be more aggressive with their other stuff. It just does.
Right. What is one piece of universal financial advice you believe benefits all professionals?
Yeah, just start saving. That's it. Like just start somewhere. Um, Doing a little bit of something is going to be better than doing a little bit of nothing. Like it's always going to be better. And there's two schools of thought when it comes to saving money. There's 95% of America and there's 5% of America. 95% of America will spend whatever they have and they'll save the rest. 5% of America will save whatever they have and they'll spend the rest. Seems very arbitrary. But what ends up happening is that these people, the 95%, always end up working for these people, the 5%. Reason being is because humans are habitually bad savers. So we have to implement what's called systematic saving strategies to be able to say, hey, like we're putting money away every single month and we know it's getting saved no matter what. It's the reason why people's 401ks tend to be their biggest assets because they have to pay into that every single month. It's the reason why people's houses also tend to be their biggest assets as well because they have to pay that mortgage every single month. So if we can figure out a way to say, hey, how do we have our clients automatically save, set up those systematic saving strategies into their short-term, mid-term, and long-term goals, well, then you can just spend with reckless abandon, right? You can spend as much as you want. You can spend guilt-free. And that's the whole goal. Like I tell my clients all the time, like my goal is to get you to spend as much money as humanly possible. As much money as humanly possible, because I know if we're saving it before it hits our accounts, that we're on track and we're good. So just start saving is the number one general piece of advice I would have.
And when you say savings, does that mean just going and throwing that into a savings account?
That could be anywhere, right? And that's where I come in and say, hey, probably the emergency fund would be the best bet for you to have. having some type of emergency fund in place, and starting there. It could be through retirement accounts at work, just starting out with 2, 3, 4% towards the 401k, towards the TSP, towards the 457, whatever it may be. But then also just saving in general, right? That could be midterm, right? Just throwing some money in a brokerage account, throwing some money in cash value insurance, like whatever makes the most sense. Just starting somewhere. Now, if you want that guidance on where to save and how to save, that's where conversation comes into play. Because it's like, now what are we saving for? What is it used for? That's where I would come into play.
Yeah.
But yeah, if you just want something very simple, just go get a high yield savings account just to go save up, right? Just start off there, start small. Hey, deduct $25 a month, $50 a month, and you'll be surprised how much it just builds up over time. You'd be so surprised. You'd be so shocked.
This is true. Um, what's one piece of advice you'll give any, let's say, 17, 16-year-old who is trying to get into financial, the financial route, right? Study finances, study, yeah, finances. What is one piece of advice you'll give them, or a few pieces of advice?
Yeah, absolutely. I would just say one day at a time, is just learning different things about the financial realm. Um, there's a lot when it comes to investing. There's a lot of different things you can read, different books you can read. There's different materials, Wall Street Journal. There's different like stuff that you can read up on articles and stuff like that. I would definitely say keep an open mind and just try to learn one new thing every single day. It doesn't have to be significant. It could just be like, hey, what are the history of taxes? Next thing you can learn is like, well, what are the history of mutual funds? Like, how have mutual funds gotten more dominant? What's the history of the SP 500? Why is it so popular nowadays? Um, how have like 401ks and how is retirement planning went from the responsibility of the employer to the employee with the reduction of pensions, right? It's just like figure out different stuff like that. Just learn one new thing every day, whatever it might be, right? And once you show that interest, like it'll just snowball because you just want to learn more and more and more. And all of a sudden you'll be a financial planner, you'll be a financial analyst. Like you'll just find yourself in that position because it doesn't matter what interview, it doesn't matter like what else come into your wheelhouse. You'll be prepared because just like you've been reading this stuff every day, been looking up YouTube videos every single day. Like, it doesn't matter how you consume it, but just consume something. Right? You want to get big, you eat food, right? You want to say, like, hey, you want to get healthy, you go to the gym. You want to learn about finance, just learn about finance. Go read something, go do something. Doesn't be major, but it's just like I said, a little bit of something better than a little bit of nothing. And all of a sudden you'll look up in 5 years, like, holy crap, how did I learn all this stuff? Because you just took a little bit of time every single day.
Right. I had this question to ask you. Um,
Yeah.
how would you explain the concept of integrated financial planning, and how does that differ
Yes.
from more traditional approaches?
Yes. Oh man, this is my favorite question. So integrated planning, I would describe as really integrating um, security or guarantees into your financial plan in the most efficient way possible. That's what I would say would be integration. And what I mean by that is like as I was trying to differentiate from traditional planners or more so money managers, where it would be more, hey, let's get you some money on the market. Let's see what returns we can get you. That's great and all, but we have to have a plan in place in case something were to go wrong. If you think about it like this, think about your investments as your sports car and think of like fail safes or integrated planning or insurance as SUB, right? There's a story I always tell where it's like we have a client that has a very, very nice sports car, sweet, sweet sports car. And we're like, man, how often do you drive that thing? And he's like, you know what? Honestly, I don't drive it that often, maybe like 20, 30 days a year. I said 20, 30 days a year? Are you kidding me? How are you driving it not that much? He's like, man, that thing, it rains, it snows. What if I go on a long trip? Like the gas mileage really high. So I'm gonna use the SUV for most of my driving, but when I do want to flex a little bit, I'll use that sports car. It's the same type of thing in your financial plan where it's like if you have all of your investments on the market on the roller coaster, so to speak, you have no protection in case where taxes were to go up, in case the market goes down, in case you run out of money. You have no protection in place. So we have to be able to integrate that as well. Also, think of it just like this. It's like most people like to watch, like let's say football, for example. You got the quarterback, star quarterback, he's doing his thing. Um, I always ask my clients, what do you think is the second most position in on a football team, and specifically the offense? And you might hear different answers, the receiver, the running back, whatever, they cut to touchdowns. And I'm like, but who protects the quarterback? And I'm like, oh, the lineman, specifically the left tackle. And I always say, yeah, the left tackle because they protect the QB's blind side. Same type of thing in your financial picture is protecting your blind side, right? Biggest risk in when it comes to planning is running out of money, taxes eroding your financial picture, or Uncle Sam just become a really big part of your financial picture, and just figuring out like when and how to liquidate those dollars, where and how to liquidate those dollars. If all of your money is on the roller coaster, if it's just in a market correlated asset, and you withdraw at the wrong time, like you withdraw during 08, 2008 economic crash, you withdraw during COVID, you withdraw during a dot-com bubble, Great Depression, you have problems because you have now realized those losses, and that's going to compound because you're not going to allow those assets to rebound and go back up. When you have an integrated plan, whether it's guaranteed income, whether it's insurance, whatever it may be, you're basically carving out a safer, predictable, more guaranteed asset that allows you to be more aggressive with the other investments. Because the market's down, now you can pull from this little lever. If the market's up, now you can withdraw from this lever. If you need to save up for a goal, you have something to draw from that lever. So when you integrate those plans, you integrate those different things, not only from an investment perspective, from insurance perspective, you now have a bulletproof plan. Because number one, you have guaranteed income coming in the door so that you don't have to liquidate from your market correlated assets. You don't need to. But the second thing is that, like, if that were to happen, well, now we're good because we can last way longer in retirement. We don't have the fear of running out of money because we have a plan in place if something were to happen. That to me, I would describe as integrated or integrated planning is having those fail safes in place.
Thank you. Thank you. That makes sense. That makes sense. Before we get up out of here, two-part question.
Mm.
And you mentioned you got a sport podcast. Could you plug that in?
Oh yeah, that thing is long gone, man. That thing is long gone. No, I called myself the unbiased sports fan. It's still up. It's still up on YouTube and stuff, but I don't. Hell, I'm not using that thing anymore. But you can find me on Brandon.White at nm.com or just search Brandon White at Northwestern Mutual. You can find me there. I am very active there. I am very active on LinkedIn. But the sports podcast, as much as I love it, it is no more. It is dormant.
Yeah. And is there anything that we haven't covered that you would like for listeners to know?
No, absolutely. Just take one day at a time, whatever it is. These things take time. Financial security takes time. Building up your career takes time. And just becoming the person you want to become also takes time. It does not happen overnight. And I know with just like online stuff, people think things can seem very instant, but no, it just takes a lot of time and effort to be able to change these things. But once you take it one day at a time, effectively change will come because you're just working at it so consistently. So whether it's finances, whether it's career, personal life, relationships, just take it one day at a time.
Thank you, man. This was definitely a great conversation. Hopefully, we can do this again in the next quarter because hey, finances is something that's not going anywhere, right? And
No.
it's getting better and better, or worse and worse for most folks. But why would it keep getting worse when we have financial advisors, out there who can help us? And that goes to for myself too as well. So, thank you again for your time. And thanks for reaching out to have this conversation. I really enjoyed it. And I hope, you folks who are watching also enjoy it as well. He's Brandon White. He's a financial advisor at Northwestern Mutual. And you can find him on LinkedIn. His ad will be at the bottom here. The link to as well to reach out to him will be at the bottom here. Or you can reach out to me and I'll connect you guys, definitely. So yeah, this is Stuck in the Middle. I'm your host, Uncle AK, and my guest today has been Brandon White. And follow us on all social and streaming platforms at SITM Podcast. And again, his will be at the bottom, so you can just click it and it will take you there. And also, too, you had given me a link of how people can, schedule one-on-ones with you. I'll put all that in the show notes as well for you to access that. Yeah. So thank you guys and catch you in the next one. Peace.